Christine Kopr here, just going live.
Waiting for our friend and colleague Jacqueline Zerbe from Total Mortgage to join us and do a little live video talking about interest rates because there's been some new mortgage news. Oh my gosh.
Hi.
Hi.
Okay,
Okay, well, hey, hi 10 to us because it's the first time I'm doing a Instagram live. I'm a slow adopter for all, clearly.
Me too. Thank you for letting me be your guinea pig with you.
Oh, awesome. Thank you for participating. Okay, great. So because we'll probably have to try to edit this a little bit, well, or maybe we won't because it's live now. I wanted to connect with you today, Jackie. Jackie is a mortgage broker in North Van with Total Mortgage. There's been some interesting news in the bond market lately, and the bond market impacts the fixed rate market. So not variable interest rates, but fixed rate market. And, obviously rates are really high these days. So any potential relief for anyone coming up for renewal or thinking about purchasing, this could be, a big deal because anything really counts these days. So Jackie, we noticed that the bond market was steadily dropping in the last week or so, pretty substantially, if I'm not mistaken, about 30 to 40 basis points. And I've heard rumors that the major banks might actually be reducing their fixed rates for the consumers. And I just thought, rather than speculating, talk to you. Have any of the lenders reduced their fixed rates recently?
Absolutely, which is welcome news, like you said. So we've actually seen bond yields dropping for the last 3 weeks, and they've been declining steadily, but it wasn't until last Friday that we started to see some lenders start to decrease their fixed rates. So since October 19th, when bond yields were sitting at 4.4%, they're now sitting at 3.85. So that's 0.55%, a 0.55% drop. So we haven't seen lenders drop their fixed rates by that much, but they certainly have come down. So as an example, if you have an insured mortgage, a 5-year fixed rate a few days ago was around 5.84%. And today you'd get that same mortgage at 5.69. So about 0.15%. So not a huge drop, but definitely a drop. And if bond yields continue to come down, we'll see those fixed rates come down even more. Similarly, we've also seen on the 3-year fixed rate side, we were looking at rates around 6.5%, and those are now almost down to 6.1, around 6%. So we're seeing bigger drops, which I'm mentioning the 3-year because a lot of my clients have been opting towards those shorter terms because they don't necessarily want to be in a longer term while rates are so high. Another thing that we've seen is that more and more clients are actually leaning towards variable rates, which I know is quite strange because variable rates have been getting a bit of a bad rap the last 18 months thanks to prime increasing as much as it has. But to give you an idea, if you have an insured mortgage, so if your purchase price is less than 20%, you could be getting a discount beneath prime as much as 0.95%. So that's quite big.
Whoa.
So
0.95,
yes.
Like almost a whole percent discount.
Exactly.
Wow.
Now that's if you're insured. So that's if your down payment is less than 20%. If you have a conventional mortgage, so if you have at least 20% down payment or more, or if you're refinancing your mortgage where you're looking to tap into equity to increase the mortgage, whether it's for renovation or investment or debt consolidation, or if you're looking to extend that amortization, then you're going to fall into the conventional mortgage bucket. And on the variable rate side, you're looking at between prime minus 0.05 and maybe prime minus 0.3, 0.35. So not as big a discount, but we are hopefully going to see those discounts start to increase as well.
Okay.
So something to
So awesome. Oops. Whoa, I just hit my camera. Woohoo. So just like to summarize, so we are starting to see some decreases in the fixed term rates because the bond market or bond rate has been dropping. Yes. So you said the bond rate has dropped 0.55%. So that's 0.5% in the bond market space. And lenders just as of Friday have started to give out how much of a decrease?
I would say around 0.15%. We're going to start to see those discounts get bigger and bigger, possibly 0.2%. It's important to note that not all lenders have dropped their rates yet. The bond market can be very finicky, so it can go up and then down and kind of there's a lot of movement. So lenders,
Volatile.
yeah, very
Yeah.
volatile. So lenders, before they make a knee-jerk reaction and decrease their rates, they want to steadily see that decrease and that it's consistent before they go and lower rates. So I'm sure we'll see more lenders decrease their rates if the bond yields stay on that downward trajectory.
Okay. Okay, awesome. And then thank you so much for confirming that. So that's great news. We have started to see some decreases. We might see some more if the bond rate hangs out here. I mean, personally, obviously the inflation information, it's still very sticky. It's still there. It seems like it's starting to, decrease as opposed to increase, which is what we want to see for a flattening of the rates. We've kind of seen that now. There's been talk that perhaps we've hit peak rates, and perhaps if there is further inflationary pressures, we might see another one or two increases. But right now, it kind of seems like it might be there. But of course, it all comes down to the information that the Bank of Canada gets. So in conclusion, it feels like we're going to be higher for longer. And obviously, for people who are renewing, that's a big deal, especially if they had their mortgages not, back in 2018, 2019, or whatever the math is coming up, depending on what your term has been. So obviously that's a big concern for a lot of people. And I'm just wondering if you can share, one or two strategies that our options are helping people manage these increases when they're coming into their renewals.
Absolutely. There is definitely going to be sticker shock when clients are coming up for renewal because a lot of people are used to having these ultra low rates in the 2-3% range, which has been lovely, but has been artificially low for the last decade. So now we're going to have a bit of a reality check when your mortgage is up for renewal in 2024, 2025, 2026.
Or tomorrow.
So or tomorrow. Yeah.
Tomorrow.
So my biggest piece of advice is that if you have a mortgage that's maturing, to get your ducks in a row sooner rather than later and give yourself plenty of time. Now, we can hold rates for up to 4 months, which means right now we can secure a rate for you up until almost the middle of March of next year. So now is actually a great time to reach out to your mortgage broker while we're in this bit of a dip, while interest rates have come down, because there is a chance that they could go back up again. So we can secure these rate holds for you and keep monitoring them until your maturity date. So I would say get your ducks in a row, chat with your mortgage broker, give yourself plenty of time, because that way we can shop around for you and assess the market and look at your options. In terms of your renewal, when you get that renewal notice from your lender, don't sign it right away. Speak with a mortgage broker, because we've got access to a multitude of lenders. So we can advise you on what's available in the marketplace. You might be pleasantly surprised to know that we could switch or transfer you from your existing lender over to another lender and secure a much, much more competitive rate for you. Lenders right now are banking on the fact that because rates are higher, you can't qualify by trying to move your mortgage elsewhere, because you have to stress test at that 2% higher rate. So your existing lender is banking on you not being able to move. Having said that, if you have an insured mortgage where when you bought your place, you put down less than 20%, we could move you to a new lender right now at an insured rate or insurable rate, and you wouldn't have to qualify at that 2% stress test rate. So you could qualify at your actual contract rate. Right now, there's some amazing deals out there for insured or insurable mortgages. So that's one option. Another option is if you have a conventional mortgage where you put down at least 20%, and now your mortgage is coming up for renewal and you're having this payment shock of your mortgage is going to increase by $600 or $800 a month, you are able to extend your amortization. So you can potentially push that amortization out to 25 or 30 years, and possibly even 35 and 40, depending on the lender and depending on your situation. So by extending that amortization, you'll be able to improve your cash flow, your monthly cash flow, which is going to come as a huge relief.
Okay, so in summary, the two things I picked up out of this is if you have an insured mortgage and you're renewing, and insured mortgages are for properties typically under $1 million and less than 20% down. Don't be afraid. You might have some options. You will not get stress tested. because there are some other lenders that will qualify you at some better competitive rates than where you are today. So connect with your mortgage broker. And the second option is to maybe re-extend your amortization, AKA you started your mortgage, you're rolling up onto your 5 years. It was a 30-year am, let's say, and you've now paid off for 5 years. When you go to renew, re-extend back up to that 30 years. So you're spreading the new balance out over 30 years instead of the remaining amortization to help reduce that mortgage payment.
Exactly. Right? Yes. Two things I want to mention. If you purchased your home 3, 4, 5 years ago under $1 million and you had an insured mortgage, your home might have appreciated in value now, and your home might be worth more than $1 million, which is very likely because COVID pushed prices up, right? So even if your home is worth more than $1 million now, you're still able to switch to a different lender and get that low rate without stress testing. So that's something good to know.
Well, that's really
the
cool.
other
Yeah, sorry,
the other good thing to know is if you had an insured mortgage when you bought your place, whenever it was 2, 3, 4, 5 years ago, since then you might have purchased your home and then after the fact went and bought a car. So you might have financed a car. You might have a $600 car payment now that you have to account for. So when you're coming up for renewal and you might not qualify, you're thinking, okay, well, now I'm stuck with my lender because I can't qualify because I have this $600 or $800 car payment that I have to account for. That's not necessarily true. We could switch you over to a new lender at a nice low rate without having to stress test with that 2% stress test. And we can secure a line of credit for you so that you can pay out the car loan. And so then you're going to have a lower monthly payment overall. So another good thing to keep in mind.
Wow, there's so many, like, I'm so glad we're doing this video. Hopefully people can get out there and hear it, because obviously, you're sitting back at home just thinking about all this stuff and you hear about the mortgage rates. It just feels like there's no options. Obviously, it's going to hurt if you're not prepared, or really, regardless, people are going to feel the pain, and anything they can do to help control their monthly payments is going to be really helpful. I myself, being a rental housing provider, actually did that strategy. I wasn't actually, and thank you for bringing it to my attention, that you can re-extend out your amortization. And in fact, they let us do it actually even before renewal. They let us do it ahead of renewal. Just anytime we were able to re-extend out our amortization, reduce our monthly costs in order to help improve our cash flows. So, absolutely. And so for any homeowner, I think that would bode well. Obviously, everyone's expenses are going up today. So awesome. Okay, so fixed rates have come down a little bit. That's great. And it sounds like if the bond market kind of hangs out here for a little bit longer, perhaps the lenders will give even more of a discount on the fixed rates. It sounds like, while obviously doesn't correct the problem of high interest rates, but at least maybe help decrease some of the pain, there are some renewal options for insured and conventional mortgages. I also heard there's a new lender out there that apparently is trying to undercut the major banks. I don't know much about it. I just saw something today. I was wondering if there's anything to share about that. That could be interesting.
No, I think anytime there's a new lender, I think that's actually really good for the mortgage market because it drives competition. So if there's one lender that's coming out with lower rates compared to everybody else, it forces all the other lenders to also lower their rates. So I'm interested to see how that pans out. And I think that's a good thing for everybody because it gives you more choice.
Awesome. Okay, Jackie, is there anything else that you think people should know before we cut it here today?
No, I think the best thing is that if you're not sure about what your options are when it comes to your own mortgage, whether you're feeling stressed with where things are at right now, if you're in a variable rate or an adjustable rate, to reach out to your mortgage broker. If you don't have one, reach out to me. We provide unbiased advice. So we'll look at all of your options for you, including your own lender. So we're very much transparent in what's best for you, the client. Reach out to us if you're concerned with where you're at currently with your mortgage, or if you're concerned about what's going to happen when it comes time for you to renew. And yeah, we're happy to help.
Oh yeah. Oh, and lastly, if you're just joining us, another thing that another strategy that I love that you mentioned is, like, if your renewal's coming up, but you're still maybe even 6 months away, talk to your broker now, because we just had that small dip in the fixed rate market. you could secure that, and your mortgage broker, like Jackie or whomever, can hold that for you and see as you get closer to your renewal if perhaps better rates come, or if the rates jump back up on a fixed term basis, if that's what you're looking for, you have that secured. So thanks for also bringing that up as a strategy. So thanks everyone for joining. Yeah, well, that was kind of fun.
It was. Thank you for having me, and thanks for making this happen.
Thanks so much. And of course, if you don't have a mortgage broker, Jackie's an awesome person to reach out to. And of course, I'm happy to help in any way I can. Thanks to everybody so much for joining in. And make sure, if you didn't catch the beginning of this video, make sure to check it out, because there's lots of great information on today's mortgage market for you. All right, have a great one, everyone. Cheers. Bye.